Save the entrepreneur. Save the world. The innovation sector is the most important sector in the world. In the beginning, religious institutions influenced society to support capitalism through entrepreneurship. Local commercial and banking enterprises cooperated to supply capital, our metaphorical water, to the entrepreneurial seedlings to help them grow. However, as society evolved, commercialization became more difficult, and banking institutions slowly eroded their support of the entrepreneur. This gave birth to the venture capital industry, whereby venture capital supported entrepreneurs just as the local bank had once done. But the venture capital industry quickly became centralized in small pockets like Silicon Valley, and at the same time they were centralizing, they became less interested in providing capital, water, to seedlings, and more interested in only the harvesting stage of the entrepreneurial crop. This left only angel investors to focus on true startups, even though they had very little water compared to the capital which left the asset class. Eventually, like the VCs, they too began to focus more on later-stage companies. The only exception to this general rule is the huge sums of money thrown at countless numbers of Me Too opportunities in the software industry, where investors attempt to copy the latest and greatest app in an attempt to make money. This is just the latest bubble, and perhaps the last. So, like a field with no water to nurture it, capital has dried up. As a result, investors and entrepreneurs alike are running towards the only perceived healthy plants, or at least the only plants being provided with water. This serves to further accelerate the bubble. As an industry, venture capital focuses on a few plants at the expense of the rest of the crop. This causes drastic consequences for society when passion, expertise, and innovations dry up in what is called the Valley of Death. And if entrepreneurs die, if there are no startups to build the fundamental innovations our world needs, the economic structure surrounding these fields dies as well. This reveals a true paradox where the entrepreneur can solve so many of the world's problems. But first, the world must solve the entrepreneur's problem.
Investors have their own paradox as they have methodically moved away from the very area where the best returns are found. Literally, trillions of dollars have moved into non-value generating investments that in part have created the risk the world faces now. Similar to an algae bloom, the very things humanity is doing to survive as individuals are the very actions that are destroying us collectively. Now, the U.S. is about to get caught up in this crippling cycle unless we make a different choice. Reliable industry data indicates that the day VCs stopped investing in startups is the day they stopped getting good returns. When comparing venture capital allocations into startup stage companies and industry-wide pooled returns over the same period, the correlation is difficult to ignore. To those familiar with VCs and startup investing, however, the correlation is not surprising. In fact, many best practices of venture capital actually undermine the very returns they seek. Meanwhile, as returns were spiraling, data was being collected by the Ewing Marion Kauffman Foundation on 1,137 exit events stemming from angel-backed companies. It showed that, in the aggregate, this group of investments returned a 27% IRR, far superior to the returns of the overall venture capital industry. This demonstrates that startups, not late-stage companies, garner most of the success in venture investment. In 2012, a mathematical researcher turned entrepreneur applied the Monte Carlo algorithm to the Kauffman data and demonstrated that a roll-up of 100 of these investment types would have a near 100% probability of returning at least 2x capital. Despite this data, the venture capital industry has turned away from startup investment and now allocates less than 3% of total dollars into startups. Much of even this tiny allocation is geared towards software industry applications that create little to no societal value, simply because it adheres to copycat, quick flip mentality and false valuations that drive the current bubble. As ironic as this may seem, the venture industry continues to move to later stages of private company investment. Now, angels are following, as over 50% of angel investments have moved to later stage.
Worse yet, the same time startup money dried up, the hedge fund money fattened up. In just 10 years, the hedge fund industry has accumulated $2 trillion into vehicles that are not creating any tangible value to society. At the same time, another $4 trillion has walked into the money markets in the name of capital preservation. This is indicative of what economists refer to as the financialization of our economy. Instead of value by creation, everyone is desperately trying to trade their way into profits. The daily trade volume has skyrocketed due to hedge fund strategies, many of which include the hiring of quants, who design high-volume computerized trading methods. As a result, even though new inventions are at all-time high levels, the formation of new companies to take those inventions to market is at all-time low levels, as nearly $6 trillion total has moved into the machinery of finance capitalism. This scenario contributes to the largest transfer of wealth in history, as a few people use financial plays to take advantage of both the 1% and the 99%. In what some people call the Muppet Show, there is a zero-sum game for investors overall, and hedge fund managers are shown to be the only real winners. These people have learned that profit is easier to make through financialization than through value creation. Karl Marx, author of the Communist Manifesto, predicted that financialization of the economy would be the last stage of capitalism, before the system implodes. So it appears that Adam Smith, who believed in the invisible hand of economic forces, and Karl Marx, who predicted the destructive nature of financialization, were both correct. It is our belief that society's support of entrepreneurship, or lack thereof, is an underlying cause of the infamous Tytler cycle of democracy, which predicts the fatal sequence of society. When we support entrepreneurship, we are in spontaneous order and full of courage, liberty, and abundance. When we do not support entrepreneurs, we fall victim to financialization and create complacency, apathy, and dependency. Whether or not we end up in bondage appears to be our choice.
We, the people, will ultimately decide the fate of humanity. We can no longer leave it up to governments or economic oligarchies. We must be active participants, connected, and fully conscious. The future, however, is perilously close to colliding with a proven historical cycle of destruction that would set civilization back decades. We have been disassociating ourselves from reality, but now it is time to wake up. Like Neo in the Matrix, it is time to take the red pill. We organically and largely unconsciously allowed capitalism to devolve into something that few of us saw coming. The unintended consequences of finance capitalism has left massive funding gaps as thousands of mankind's greatest innovations sit dormant. We believe these emerging innovations have the ability to solve many of the world's problems. Therefore, open-source capitalism exists as a platform to bring institutional investment back to startups and unleash these innovations. Herein lie our collective solutions to job creation, investor returns, and social advancement. Why label this platform open source? Similar to early web developers who decided that it would not be practical to change the world using a legacy system of closed-end, proprietary practices, we must address the same concern with our capital markets. These pioneers created the concept of open-source methodology to allow for a self-enhancing, cooperative community that resulted in unprecedented levels of innovation. In that spirit, OSC provides similar levels of unprecedented, fair access to help grow the next generation of innovations, literally reinventing the industry itself by solving fundamental problems with fundamental solutions. Within OSC, timeless principles inherent to democracy, capitalism, and freedom integrate with tangible processes that take advantage of humanity's advanced intellect, advanced tools of production, and advanced methodologies to create our solution for the innovation industry. For the first time in history, we have the ability to collaborate and solve problems that government and large corporate oligarchies cannot solve on their own. Building a new model reveals hope. Creativity and innovation can still occur outside the walls of government and financial infrastructures. There can still be entrepreneurs, strong in spirit and relentless in pursuit. Entrepreneurs can beat the systemic decline of our way of life by adhering to the original principles of a free market economy. Simply stated, capitalism works great until free market access becomes restricted, and people find ways to profit from restrictions rather than eliminating them. In response, we are seeing a new kind of entrepreneur rising above the dysfunction of society as they help prepare the world for a long overdue, massive shift. These entrepreneurs individually and collectively determine our mutual fate, all depending on remarkably simple choices we make in the next few years. Since entrepreneurs are the only ones that can fundamentally change this economic bottleneck on a worldwide basis, we must save the entrepreneur in order to save the world.
We exist to save the entrepreneur.